Welcome back to another video, brought to you by the Online Money Mentors. Have you ever looked at a crypto chart and thought, what does all this mean? Don't worry, you're not alone. In this video, we're breaking down how to read cryptocurrency charts step by step in a way that even a fifth grader can understand. Let's dive in. First, let's talk about candlestick charts. Each candlestick shows what happened to the price of a cryptocurrency during a specific time period. It has four parts: the open price, or where the price started; the close price, or where the price ended; the high price, the highest point it reached; the low price, the lowest point it dropped to. The thick part of the candlestick is called the body, and the thin lines are called wicks, or shadows. If the body is green, the price went up. If it's red, the price went down. Now, let's look at some important candlestick patterns. A hammer has a small body and a long lower wick. It means the price might go up soon. A shooting star is the opposite. It has a small body and a long upper wick, meaning the price might drop. The engulfing pattern happens when a big green candle completely covers a small red one. That's a sign the price could rise. These patterns give us clues about what might happen next. Next, let's talk about moving averages, or MAs. These are lines that show the average price over a certain number of time periods. MA10 shows the average price for the last 10 days. MA50 shows the average for 50 days. MA200 shows the average for 200 days. If the price is above the MA50 or MA200, it's usually a good sign. When the MA50 crosses above the MA200, it's called a golden cross, and that's very bullish. If it crosses below, it's a death cross, and that's bearish. Indicators help confirm what the charts are telling us. RSI, or Relative Strength Index, measures momentum. If it's above 70, the market might be overbought and prices could drop. If it's below 30, it's oversold, and prices could go up. MACD, or Moving Average Convergence Divergence, uses two lines. When the MACD line crosses above the signal line, it's a buy signal. When it crosses below, it's a sell signal. Bollinger bands show if a price is too high or too low. If the price hits the upper band, it might drop soon. If it hits the lower band, it might rise. Now let's talk about trends. An uptrend has higher highs and higher lows. A downtrend has lower highs and lower lows. A sideways trend moves in a straight range. By combining trends with indicators, you can make smarter decisions about when to buy or sell. The best way to learn is by practicing. Use platforms like TradingView to study charts and backtest your strategies. And always remember, use stop-loss orders to protect yourself from big losses, and never risk more than 1 to 2% of your portfolio on a single trade. Now you know the basics of reading crypto charts. Whether it's candlesticks, moving averages, or indicators like RSI and MACD, you're ready to start analyzing like a pro. If you found this video helpful, give a thumbs up, subscribe to our channel, and share it with your friends. Thanks for watching, and happy trading! Visit our website at onlinemoneymentors.com.